Welcome back to the Algobot channel, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host, Algobot, and in today's lesson we're exploring an expert advisor called the Session VWAP Engulfing Hedge. This is a pure price action, mean reversion approach built entirely around the volume-weighted average price, often shortened to VWAP. Over the next few minutes you'll learn how it measures when price has stretched too far from value, how it uses an engulfing candle and a liquidity sweep to time its entries, and how a reactive hedge leg manages an extended adverse move. Remember, this is educational content only and not financial advice. Let's start with the big picture. The Session VWAP Engulfing Hedge is described in its own source code as a pure price action system. That means it does not lean on the usual library indicators like moving averages, the relative strength index, or Bollinger Bands. Instead, everything is built by hand, directly from the raw candles. At the heart of the strategy sits the Session VWAP, the volume-weighted average price. This is the level that large institutions often benchmark their fills against, so it acts as a kind of gravitational center for intraday price. The strategy anchors this VWAP to the calendar day, resetting it as each new session begins, and then builds its own standard deviation bands around it. When price travels a long way from the VWAP, beyond one of those bands, it is, by construction, considered expensive or cheap relative to the day's traded value. This is fundamentally a mean reversion idea. The strategy looks to fade those stretched extremes, aiming for a move back toward the average. But it does not act on distance alone. Before it considers an entry, it wants to see three more things confirm: a liquidity sweep of a recent high or low, an engulfing candle that reverses the move, and an imbalance, or fair value gap, showing genuine displacement in the new direction. Finally, there is the signature mechanic that gives the strategy the last word in its name. Because a genuine trend day can keep running and never come back to value, a reactive hedge leg is armed. If a trade drifts too far against itself, an opposite position is open to help offset the extended move. In terms of who this is built for, it's aimed at traders studying liquid, value-respecting intraday markets, such as major currency pairs, gold, or an index, on the 5, 15, and 30-minute charts. As always, trading involves risk, and losses do happen. Now let's walk through exactly how the strategy makes its decisions. On every closed bar, it recomputes the Session VWAP from scratch. It takes each bar's typical price, the average of the high, the low, and the close, weights it by volume, and accumulates those values across the day. From the same sums, it derives a variance, and from that a standard deviation. The upper and lower bands are then placed a chosen number of deviations away from the VWAP, defaulting to 2. Because everything is measured in the instrument's own price units, the logic scales to any symbol or time frame without hard-coded pip values. With those levels in hand, the strategy only hunts for a new setup when it is completely flat, and only after enough bars have formed in the session to trust the VWAP. Let's take the long side first. For conditions must all line up. First, price must be stretched, with a recent low at or below the lower band. Second, the just closed candle must sweep support, printing a new local low compared with the previous 10 bars. Third, that candle must be a bullish engulfing of the prior candle, and it must displace upward, either closing above the prior bar's high or leaving a fair value gap. Fourth, its body must beat the recent average body, confirming momentum, and price must still be below the VWAP, leaving room to revert. When all of that aligns, the strategy signals a long entry. The stop loss is placed just beyond the swept low, padded by a fraction of the average range. The take profit is set at the VWAP itself, the mean reversion target, with a sensible floor, so a nearby VWAP still offers a real reward. The setup is also rejected if the reward-to-risk ratio falls below the configured minimum. The short side is the exact mirror, price stretched above the upper band, a sweep of resistance, a bearish engulfing candle displacing down, momentum, and room to fall back to value. Then comes the hedge. While a base trade is live, the strategy watches its adverse excursion. If that adverse move reaches 70% of the trade's own risk, it opens an opposite position whose target sits beyond the base stop. so it benefits if the move keeps extending. If price instead recovers back under 30% of risk, the hedge is closed, and the base is left to aim for the VWAP. When the base finally resolves, any surviving hedge is closed too, so the account is never left holding a lone reversed leg. Let's read through the MetaEditor code on screen. At the top are the key input parameters. Deviation multiple, defaulting to 2, sets how many standard deviations from the VWAP count as stretched. Range lookback of 14 feeds the average range and average body baselines. Sweep lookback of 10 is the window the swept extreme must be a new low or high of. Momentum multiple demands the signal candle's body be at least 1.1 times the average body. Stop pad frac, min reward risk, HedgeTriggerFrac, and the base lot size round out the set. Now the long block. The strategy first checks stretch down, confirming a recent low has reached or passed below the lower band, and swept support, confirming a new local low. The if statement then requires all conditions together: the stretch, the sweep, a bullish engulfing, an upward imbalance, the momentum body, and price still below the VWAP. When they all read true, the stop loss is calculated just below the swept low with a padded distance. The take profit is set to the VWAP, and the code calls send base with true, which places the buy. The short block is the mirror. It checks stretched up against the upper band and swept resistance for a new high, then requires a bearish engulfing, a downward imbalance, momentum, and price still above the VWAP. The stop loss goes just above the swept high. The take profit again targets the VWAP, and send base is called with false to place the sell. At the bottom, send base is the single place orders are sent. It routes to trade.buy or trade.sell, attaching that structural stop loss and take profit to each leg. Let's bring the logic to life on the chart. On screen, you can see a candlestick sequence with 3 lines drawn over it. The middle gold line is the Session VWAP, the volume-weighted average price that acts as the magnet this strategy trades back toward. Above and below it sit the upper and lower deviation bands, placed at 2 standard deviations from the VWAP. These mark the zones where price is considered stretched or far from value. Watch the first few candles on the left. Price is drifting lower, slipping away from the VWAP and heading down toward the lower band. Each candle prints a slightly lower low, and selling pressure looks like it's in control. Notice how the move pushes price right down to, and then beyond, the lower band. By construction, once price trades below that band, it is statistically cheap relative to the day's traded value. Now look at the candle that dips beneath the lower band and carves out a fresh low. This is the liquidity sweep. The strategy checks that this bar makes a new local low compared with the previous 10 bars. In other words, it pokes below recent support, where resting orders tend to cluster, and collects that liquidity. A sweep on its own isn't enough, though. The strategy waits for evidence that the move back toward value has actually begun. That evidence arrives on the very next candle, the bullish engulfing bar marked as the buy entry. See how it opens near the prior candle's low and then closes back above the prior candle's open, fully wrapping the previous bar. Its body is larger than the recent average body, which satisfies the momentum check, and it displaces upward, closing beyond the prior bar's range. Because price is still below the VWAP, there's room to revert. All the conditions line up, and the buy entry is placed. The stop loss sits just beyond the swept low, padded by a fraction of the average range, while the take profit is set at the VWAP line itself. Follow the next 2 candles. Price lifts off the band and climbs steadily back toward value. As it reaches the VWAP line, the take profit target is met and the long trade is complete, a clean reversion from a stretched extreme back to the mean. Now the mirror image plays out on the right. Price doesn't stop at the VWAP. It keeps pushing higher, climbing through value, and stretching up toward the upper band. Again, watch the candle that pierces the upper band and prints a fresh high. That's the liquidity sweep on the resistance side, running through orders above the recent highs. The next candle is the bearish engulfing bar marked as the sell entry. It opens above the prior candle's close and closes below the prior candle's open, wrapping it completely. Its body clears the momentum threshold, it displaces downward, and price is still above the VWAP, leaving room to fall back to value. The sell entry is placed, with the stop-loss position just beyond the swept high and the take-profit again resting at the VWAP line. From there, price rolls over and works its way down. Candle by candle, it gives back the stretch, and as it touches the VWAP, the short take-profit is reached. Both trades share the same idea. Identify when price is far from value. Confirm a reversal with a swept extreme and an engulfing candle, then aim for the volume-weighted average price as the target. And remember, when a move keeps running instead of reverting, the reactive hedge leg we discussed earlier steps in to manage that extended excursion. And that brings us to the end of our walkthrough of the Session VWAP Engulfing Hedge. Today we saw how this pure price action expert advisor anchors a Session VWAP, builds standard deviation bands around it, and waits for price to stretch beyond a band. We saw how it then looks for a liquidity sweep, an engulfing candle, and an imbalance before fading the extreme back toward value, and how its reactive hedge leg is designed to manage an extended adverse move. Everything we covered here is for educational purposes only, and is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with the strategy you'd like us to explore next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.